So Sam and I naturally are on the investor relations side of things. We raise a lot of capital for our deals. I've been naturally focusing on building relationships with fund managers as well as passive investors. So basically kind of up and down the capital stack with the absence of debt has been my focus. Sam obviously with his banking background has done debt. Sam has syndicated top to bottom as well before. And I mean, your focus has obviously been retail investors for the last couple of years. And
Yeah.
it's no secret Sam's been one of our biggest partners. Last year we worked with him, had the pleasure of courting him, working him over the course of time. We met at the Taste of Texas in Houston, the best restaurant in my opinion in all of Houston. But lo and behold, a year later we worked with him on a couple of deals and we had the pleasure of merging companies together. So what we're going to be talking about today here is investor relations. So we're super excited about kind of just sharing our best practices. Obviously, my role has been working, as I said, with you folks and retail investors. And Sam's been working mostly with retail. It hasn't focused on that side of yet, but a lot of the tips, tricks, and the tools in our playbook are applicable for anything in sales and particularly capital raising, of course.
Yeah. So this is more of a heavy focus on, I would say, retail investors, how to gain retail investors for your own platform and best practices associated with that. We felt because it's more fund managers that are going to be here, what's the most interesting thing for you guys to be able to grow your business? And it's finding readily available capital to come into your deals, whether it be real estate or debt or whatever it may be. So
Absolutely. So the first thing we want to talk about, the first concept, if you will, is setting the table. And by setting the table, when you have an introductory calls, you're starting to work with individuals, basically allowing them or letting them know exactly what they're getting themselves into. So a lot of times we work with investors maybe never have invested into a syndication before. Perhaps they are new to doing something where, I've been in real estate, but I've never worked in a syndication. I don't know what liquidity looks like. I don't know how long my window is. What's a proper expectation? Because it's a very noisy space. And, people are projecting X, Y, or Z. It's kind of all over the place. So what we've kind of wanted to do to start this is just talk about that foundation and setting expectations correctly. I think all of us here probably had investors who thought a deal would be a certain type of way, or thought a deal would have a certain expectation, or would return something. And I think if you set your expectations correctly on the front end, you could likely avoid some of those problem investors, or likely avoid the pitfalls of, oh, well, you said this deal is going to be an X hold. Well, now it's this. What's going on? And particularly, none of that matters when the market's getting, going gangbusters, but it's times like right now where those investors are coming out of the woodworks that you may not like naturally, or, the expectations may or may not have been set correctly on the front end. So avoiding that, I think, is very crucial.
yeah, and setting that tone from the beginning, like you said, of what it is that we're looking to achieve, how that aligns with their goal, letting them know about really the liquidity considerations too, the types of deals that they're getting into, understanding that if it's a real estate deal, they're tying their money up, right? And there's only so many exit points associated with each of the deals, and so they have an understanding of how long they're investing for, what that's going to look like, and the expectations they should have associated with each of the deals that they're getting in with you all.
So does anyone any questions about maybe how we posture conversations to start, what we kind of lead with, things of that nature, before we get to the next thought?
I think they're awesome.
I think it's good to ask people what their expectations are and get a feel for what they're expecting, because they may be misinformed on what to expect, and you might have to
go for it.
give them a reality check.
Absolutely. And if we hear, and the biggest thing that I want to kind of harp on is timetable in a deal, because particularly right now, you have to give yourself the window, say this deal, we're ideally going to exit in 5 years, but right now a lot of those 5 years are turning into 8-year, 10-year deals just due to what's going on in the market, which is something to think about there. But also, if you're hearing someone say, hey, this is a 30 IRR opportunity, or that's what their expectation is, well, I know at Lone Star Capital, we probably aren't the right fit there. And that's just not realistic with what we're doing. And I never would want to mislead anyone on the front end. I'd rather have my hard beat today, which is finding the smart investors, the wise investors who understand the cyclicality of the business and also what an appropriate risk-adjusted return looks like. So it's our job to educate people on the front end and frankly gatekeep who comes in our opportunities or not, whether it be fund manager on our end or investor. We want to make sure that they know what they're getting themselves into and there's no misleading on the front end, and setting those clear and realistic expectations I think oftentimes I almost lead with, hey, if you're looking for X, Y, and Z, we're probably not the right fit. And sometimes, with fund managers, I kind of want to set that tone with you individuals. Hey, like this is not how our structure of your deals are going to be, or investors, because I don't want there to be any lack of communication or any structuring of the deal on the front end to mislead, because I don't have time to waste like you guys do with regard to speaking with investors that are not appropriate there.
Yeah, it's just alignment, making sure that everybody's aligned with what you're trying to accomplish with your own fund.
Yeah.
Any kind of statistics as to how many you actually turn away? Because I'm on, the volume of calls you're going to turn away 3, 5, 7%.
I wish I had more concrete data, and it's a lot harder to have concrete data when you're not raising for something. Particularly, it's like, hey, a new person comes in and they say no and ask why, but I don't have exact information on that. The fortunate thing is we have so many people from the incredible systems that Rob and Dosh have created from the marketing side, where we've got leads funneling in, where we do have an abundance mindset and attitude on that, where we know that the right people are all we're looking for, and we'd rather have the right people versus the wrong people naturally, and that's the theme at the start. And then the next topic that we want to get into and speak on is in-person connecting. So one theme that we've really talked about, and Sam kind of cemented this idea more and more, is scaling in an unscalable way. So obviously the most precious commodity we have is our time, and then obviously the next is money. But you can't go cheap on either of those things to develop real and legitimate relationships. So connecting in person is awesome. That could be coffee, that could be breakfast, lunch, dinner, taking someone to play golf. I obviously selfishly love to do that. So if you're ever in Phoenix or I'm in your city, you want to take me to your golf course, you want me to take you to one of your places or a place you want to play in Arizona, I'd love to do so naturally. But basically spending time and creating real legitimate relationships is the best. And I think such a great example of this, and I'll pass it over to Sam, is Sam raised about $27 million last year in 2024 alone. And usually Sam's call to action, if I'm not mistaken, is you call them, you send them the deal, and then you say, hey, let's get lunch, and you talk about it. Is that correct?
And it's like you said, it's not really a scalable model. But here's the thing, for a lot of those people, it's developed over a longer period of time, right? And to me, the value of, let's just say, a $50,000 investor, really not a big dollar amount, right? But somebody that I can pour into, that I know that we can align well with, who then goes, I will do every deal with you. And you end up doing, say, 5 deals that year. That person's brought you $250,000. Now that becomes a much more valuable person at $50,000 than going and finding a $500,000 investor who's only going to invest with you once, because you have the consistency built up that this is going to be somebody who's with me in every deal that we're doing, right? Because we align well, right? We communicated well. We built our relationship to where we both understand the expectations from one another. And so it doesn't take much when you start building a handful of these people. You get 10 of those guys, right? Well, you have $500,000 now in every single deal you're going to do, really for perpetuity, because you're pouring into the relationship associated with those retail investors. And so, yeah, I've always had a heavier focus on that. And the value associated with somebody like that is tremendous to us, right? Because of the consistency that it brings and the knowledge that it brings you of what you're going to have when you have your next deal available.
And the other kind of topic that goes to connecting in person is you become the brand. So I think particularly speaking to fund managers who obviously the value you guys have is your guys' emails are flooded with deals from groups like ourselves, Aspen, so on and so forth. Turns out if you can raise money, people find you pretty quickly, right? Particularly if you're posting actively on LinkedIn and things of that nature. So when you do actually take the time to harvest and nurture that relationship deeper, obviously you've got your sphere of influence, your internal circle. They know, like, love you, trust you, so on and so forth. But then when you get past that, which is the referrals, the friends of friends, the people that maybe or a work colleague, become the brand. And you become the brand not by just posting stuff on LinkedIn and social medias. Sure, you need to do that to supplement that in as well, but you become the brand and the point of authority when you connect in person. When you are sharing that, you are the knowledge haver there, and you're just developing that relationship deeper. And then the also side product, which is something that Mike here is talking about in his presentation, which is getting referrals and stuff. But you eventually over time, you do well and you take care of these people. Guess what happens? They start giving you referrals and things of that nature. So obviously, it's hard to set up time to, when you're busy, to go to lunch, to meet people. But you can't place a large enough emphasis on doing that. And one of the biggest things that Rob and I had set out to do was kind of meet people where they are, go to conferences, host dinners, wherever we're at. When we're going to conferences and we're meeting with people, it's long days. It's 8 a.m. to 10 p.m. Those who have connect with us at conferences, we take people to dinner, we meet with them the whole time. So we're doing everything we can to get in front of these individuals. So obviously our nature and our dynamic is slightly different, but a lot of those principles can apply to what you guys are doing as well, pertaining to, just going the extra mile and effort, I think, to make sure that you have someone rock solid that is willing to invest and ready to invest with you. Does you have any thoughts on that before we get to the next subject?
How are you guys positioning like your engagement with, incoming prospective investors when you're not raising for something? How do you view the?
We're always raising.
So that's a great question. So the best thing
you take them into a deal actively.
Yeah.
So it's actually a great thing that you brought up there. So to start this year, it's been very slow for Lone Star. Obviously, we don't just do deals to do deals. We take it very seriously, as I'm sure Rob's laid out to everyone in his underwriting presentation. But it's a very important thing for us to do. So for someone like myself, I can't sit still anyways. Like if I'm not raising for something, well, what am I really doing? Obviously, I'm doing podcasts, doing this, doing that. But it's really important to make sure that we're always communicating. And what I always like to do, and this is another thing we're talking about later, but specifically when we're not raising for something, if you're not raising for a deal, pick up the phone and call them. And the best thing to do is just check in on someone. How many times has someone just called you for a moment in passing? You just being thoughtful like that, or maybe even creating content or like a podcast that could be, relative to what they're doing. There's always a reason to reach out other than deal related, or say, hey, if you're an investor, hey, Mr. or Mrs. Investor, I know that, you're in this deal. Is there any questions I can help you with? And just provide that handout there so they know that you're always in communicating and thinking with them, I think is a smart and practical thing to do. So just phone calls, emails, send them an article, do something as a little touch point, if you will.
Yeah. And along those lines, I know we're bouncing around, but in the medium that they like to be communicated with, right? So we have a lot of, I have doctor investors and they cannot do phone calls at all because they're just that busy. But man, they will text like crazy. Absolutely. And that's how they prefer to be communicated with. We were talking about voice text too the other day, which I don't particularly care for, but there are certain people that's what,
I love a voice memo personally.
He loves it.
Yeah.
He loves it.
Yeah. I love voice memo. I know actually I can't voice text because I'll have this tendency to mumble and stutter a little bit. So,
And then
whatever.
he forgets what he actually texts me.
Oh, well,
I'll respond to him and be like, okay, that sounds great.
And I'm like, hey, I don't know what I
What
said.
did I say
Yeah.
to you?
So that's the ADD in me. I wish it wasn't true, but I'll be honest with you guys here. But the next topic I want to get into here is super, super important just to remember, which is keeping your offering and whatever you're doing as simple as possible. So I'm a big believer in with what we do at Lone Star, that if I can't explain to what people do in an intro investor call, which I only give 15 minutes to personally, that's what we do. Aspen Funds is probably a little bit different because you have more investment opportunities than we do per se. But if I can't explain pretty simply what we do here in 5 to 10 minutes to someone, I feel as if I have not done my job correctly. We're not creating AI, we're not creating an automation service here. We're doing real estate, and that's a pretty tried and true process there, if you will. It's very down the middle there. So the more simplistic I can keep my offering, the better it's going to be. So I always like to say with Sam, if a high schooler cannot explain, what we're doing, or if they can't pick up what we're doing, then we have failed to deliver a simplistic product to understand and can kind of digest. So recently what I've been saying for when I speak to fund managers or investors is, hey, we're creating value by 2 ways. We're going to do tax exemption deals, which is thinking about the Doge route. We're going to eliminate expenses, right? Or we're going to do a value add route where we're going to spend X to get Y return. And they understand that very simply. They can conceptualize that. So if you can kind of think of an analogy or concept for them to grasp to, that will help them understand your offering substantially more.
Yeah, as simple as I can put it too, the high school reference is about as easy as it gets for me. I'm fortunate I have a couple high schoolers, so that, I can actually tell them and they'll
Ping pong the idea.
Yeah, does this work? Do you understand that? Okay, if I get a yes or a blank stare, I'll know rather quickly. But several years ago too, we made an adjustment where we shifted returns to an AAR metric, meaning an average annual return instead of an IRR. And not that one's better than the other. It was very simple for a lot of our investors to sit there and go, oh, so I make 20% a year by the time you sell this. Yeah, okay, I got that. Whereas if I had to explain to them an IRR calculation and how it worked, and other than just saying, yeah, we're adding time into the return, right? You get blank stares from a lot of people. And so the way you present, it matters. The way that you show things matters, and the simplicity of it all really matters when you're trying to acquire, in particular when you're trying to acquire new investors.
Not to backtrack before you get to it.
All good.
When you guys think about conferences, I mean, there's so many different ones, and I've been to conferences where I feel like everyone's pitching me.
Sure.
What are the best cons?
That's my job. Yeah.
Right. As a fund manager, if I want to zero in on meeting investors, I've thought about, should I go to conferences that are not real estate conferences, or do you guys have any advice on the best?
Who's your avatar?
My personal avatar is someone who has 10 million or more in net worth.
And break it down more than that, right? Like my personal avatar would be an engineer, right? And specifically an engineer in Houston, right? So you know how many conferences we have that are engineer based in Houston? A lot, right? And they have nothing to do with real estate.
Yeah.
And I show up there and I go, hey, my name's Sam, and actually this is what I do. I actually specifically look for engineers that want to invest alongside us and get solid returns in a risk-adjusted way, and are able to supplement their income associated with it. And that has nothing to do with the oil and gas conference that I'm at.
So
right?
I would look at in twofold, right? So if I'm going to a real estate conference and I'm a fund manager, I'm probably going, or I would look at it from this perspective, I'm going there to meet sponsors and qualified people who I think I can work with and invest with. And I want to shake hands so I can tell my investors that I've met these people. Ideally, I've broken bread with them. I have a good understanding with them. And then I'm going to get education. I'm going to listen to the Jay Parsons of the world, if he's at Best Ever, to hear whatever he's saying. Or I'm going to listen to, some sort of presenter, the Neil Balwas of the world, whoever, the talking heads, right? I'm going to get information, education from them, but then I'm going to get, FaceTime with the sponsor and meet them. If I'm meeting investors, like selfishly, I wish all of you guys went to every real estate conference because then we could get in front of you. But for an investor perspective, you're probably wanting to go to likely not real estate conferences, because now you're competing against the whole world. And, I can't even tell how many times I had a great conversation. Maybe I was speaking the best I've ever spoke, but I was one of 30 people they talked to that day. Therefore, the likelihood of them retaining that or remembering that or really actually moving forward on that is very low. But if you're the one real estate guy at the only engineering conference or the oil and gas conference, you probably just stood out substantially, and you're kind of going against the grain. So
that's great.
And not only that, it's wow, this is fascinating. You mean to tell me you can invest in these things, or you put deals together that you could invest in a debt fund or a piece of real estate, and this is how you do that? Wow, tell me more. Because a lot of them haven't been exposed to them that way.
You're going to use their heads probably around I don't know, a ceramic tech
Sure.
All of a sudden you're trying to switch them into real estate. Is that easy? Or
Fascinating. It's fascinating, right? In particular, so like I said, my avatar is engineers, right? 'Cause they're more technical in nature and things like that. Most of them, as just a group, they're more introverted, right? So when they have somebody come up to them and be like, "Hey, man, this is what I do," and it's more of a, "Wow, okay, this is very different than what I'm here for. Tell me more," right? And just go right into it.
You set up a booth there, or you just
Don't even have to. Don't even have to. I can walk around. You could, absolutely, you could.
Pay to play in that sense,
Yeah.
but yeah.
You can position it as like, hey, my greatest clients, I help, like all my clients are people exactly like you. That's why I'm here.
Yeah, I mean, I have a lead magnet called Earnings Engineered. It's an ebook, literally it's speaking directly to engineers, but how they can, engineer the earnings, utilizing real estate.
And you're a former engineer.
I'm not. I'm a corporate banker. But I live in Houston, Texas. And I know who our avatar is. I mean, technical in nature, right? Which a lot of engineers are very technical, so we do speak a lot of the same language. And so it comes off that well. and they got a lot of disposable income to be able to put to work.
Proof you don't have to be whatever your avatar is in order. You just have to have a clear and cut out kind of voice and person you're talking to and cater towards that individual, right? So, but yeah, I think going against the grain and being the unique person in that room is super valuable. So if you're going to go to 6 conferences, maybe you go to 1 or 2 real estate conferences, but then try to find something else that's complementary. For instance, Keith has had a very successful background in commercial real estate. He might be one of the people that could go to a brokerage conference, but actually pull investors because he's gone from that point to this point where he knows how to kind of bring them together there, if you will. So, but that's kind of similar in that regard. Similar space, they might be investing, so they could be ready to go. But just think about your angle there and figure out ways, beforehand. It's just like any sales training, you're gonna have scripts. You're hopefully gonna do some role play and practice beforehand. So figure out what is your angle through that, right? So, and then obviously JC, you're in brokerage. People can actually take advantage of these real estate, opportunities with tax purposes, things like that. So you can use that to your advantage, to your disposal, if you have the firepower and the ammunition, if you will, to navigate that conversation with knowing your avatar and whatnot.
That's my best lead back.
Yeah.
Because both sides of the coin, you're dealing with operators and you're dealing with people that want to invest, but they don't know how. So close the gap.
Well, how many brokers too don't even own real estate? They just sell it, right? So you can be the education point there for sure.
A lot of those are some of those are my investors, right? There are other agents that want to invest, and again, they don't know how, or they can't buy the type of asset that produces the return they want.
Yeah, I mean, I talked to, if I was talking to a realtor, for instance, that was my past life, as everyone's probably knows, I've said it 1,000 times. I know that these people, a lot of times, maybe they have a good year or so, but they can't qualify to buy an investment property themselves. Or, hey, you got all these taxes you got to pay because you had a big year. Well, let me help you get some return on it below your tax bill. It's you're solving a lot of needs there, if you will. So that.
Quick question
Yeah.
from that. Sam, do you go to your current clients and say, what events are you going to be at? And then that's an icebreaker with other people's a bunch of my clients are here, so I thought I'd just come and meet.
For sure.
Yeah.
Absolutely. It's really interesting too when you start going, oh yeah, I have guys that invest with me. They're from Shell and Chevron and ConocoPhillips, and oh really? I work there. Yeah, I've got guys who work with you that are investors with me, right? These are obviously major players, but you go to conferences like that, it's a pretty easy leader into the conversation. Well, hey man, you should meet my buddy JC. He works over there, and I know he likes real estate. All right, well let's go talk. So pretty simple.
Yeah. So the next thing we're going to segue into, unless anyone had any comments, cool, is responsiveness. So this is something that's, I think, really important. And one thing that we at Lone Star Capital really try to pride ourselves on is inbox zero and getting back to people as quickly as possible. Everyone in this room is really successful. There's a reason why you're here. And if you're successful, you probably like successful people. And successful people get stuff done quickly. So as responsive as you can possibly be for your investors, for your fund managers, is incredibly crucial, particularly when it's a busy world. And this goes to the sponsors that you choose to work with. There's a reason why we're doing this event with Aspen Funds. Why? Because they get back to us right away. They're prompt. They're very respected. So who you work with is super crucial with regards to how responsive it is. If your investor, you say yes to a deal and they ask you 20 questions, which I'm sure we've got investors that love to ask a zillion questions, you might have answers to half of them, but need some color on other ones, or you want them just to go through it to see what they can do, right? Totally fair. But you need to be pretty prompt on your responses back to these people. Otherwise, you might not retain that investor. So, but you also on your end have to answer questions quickly as well. So being responsive is super obviously crucial, and who you work with really matters in that regard because different people are going to give you different response times, things of that nature.
Yeah, no, I'd say that's right. And the other thing too is you'll quickly realize who your investors are that need more hand holding, who your investors are that don't, and whether the desire to work with them going forward is worth it to you, right? So because you have a finite amount of time, right? And there's definitely still going to be some people that are worth it. I mean, we have a doctor. He's an older doctor. He's actually in his 80s, and he can't get onto our portal to download his K1 to save his life. Right, but he's somebody who's a $100,000 investor every single deal we do. So we'll go ahead and make sure that we email it to him at the end of the year, right? Because he can get his email, or his assistant can check his email for him, and he's good that way, right? So, but you just have to understand everybody's going to have a little bit different where it is what you're going to be able to do, the service that you're giving, for the compensation that you're getting for putting, these investors into great deals, right? There's a few other things that you're going to have to do other than just that.
Yeah, so responsiveness kind of goes hand in hand with reporting, which I also have as a section there. And ideally, it's monthly or quarterly. Everyone's structure is different. But you have to have something there. If your investors are kind of in the dark, particularly if they're a newer investor and they're not totally aware as to where the deal's at, or if they have questions there, that's really going to negatively impact their experience. It's funny. Our friend and kind of our mentor and someone we're in a group with, Hunter Thompson, mentions this kind of story all the time, and I'll just reiterate this once more, which is I had a deal one time with a sponsor that the reporting is terrible, but the deal was great, and we never worked with that person again. But similarly, I had a deal that was okay, the reporting was awesome. Well, those investors wanted to work with that individual again. So who you fund managers obviously elect to work with, reporting is going to vary, but just to make sure that they have the systems and processes in place to give you consistency, whether it be monthly or quarterly, whatever they basically set on the front end and can deliver upon that, will also directly impact how your investors want to re-up with you or not. And that could be the difference of, finding yourself out of business with that individual. And, particularly for fund managers, who you choose to hitch your wagons to and who you choose to say yes from a deal perspective will determine, how far you go in the business of raising capital for the most part, I would say.
Yeah, I just say consistency and reliability. That's
Yeah.
what you need for reporting.
Yeah.
I have a question for you guys. We all have multiple deals going on. We have multiple investors in different deals.
Mm-hmm.
We all have deals that some do less than others. Do you guys do any cross-marketing to create FOMO? Let's say, for example, people that are in deal A, they get all the reporting. People in deal B, they get all the reporting. And people C. Do you do anything to, I'll use the word cross-pollinate for a better term, just kind of update information to people in A about what B and C are doing?
I mean, I would say no, because you're not going to disclose, you're really not going to disclose a private entity to another private entity. It's not that we couldn't, but you would form it more in the, hey, this is what the company is doing and here are the successes that we're having.
Right, yeah. But
Right.
in the sense of
More broad instead of being specific,
yeah,
though.
more broad that, hey, we're in X amount of deals and this one here is doing this type of thing, something different. Because some guys that got back in the earlier deals may not have, oh man, I don't want it. And they're going, because I had one investor that didn't get in a deal, but he should have gotten the deal.
There's kind of a phrase where it's like, you show me the year and I'll show you how much that investor likes you.
Yes.
Because obviously if you invested in a certain year, you're going to get a disproportionate outcome. And then if you invest in 2022, you can be the best operator in the world. But as Charlie Young with Madeira said, we didn't get stupid overnight. They're having some struggles there and they're very open about it. But you certainly don't want to show, I guess it's a sensitive thing to talk about, but this is what monthly newsletters are for and why, you want to make sure that you've got a monthly newsletter and some sort of content writing to let people know what's going on. Because if they're on their general list, you should be like, oh, this deal is going so well. So you can share wins there for sure there where they can kind of read the tea leaves, if you will.
Okay, that's great. Share a win of one of the assets.
Yeah, certainly.
That's
Like,
a great idea.
let's say if you had like a community gathering at one of the properties or something like that, or you buy a retail property in Omaha.
Just refine the deal, or you just increase distribution.
Show a win.
Whatever is happening
Yeah.
that's the best. That's what you should put on social media. That's what you should put in your newsletter. It should just seem, on the outside, like, wow, you just have an amazing portfolio. Everything's going amazing, but you're just cherry picking the very best of what's going on, and then you're just promoting that rather than sending an email deliberately to those in deal A about deal B.
I wasn't doing that.
No, I
just
get
in the
it.
mindset, but that's what I was looking for. A win to the whole group.
Yeah.
You've got to be a salesman, and you've got to be a marketer, and you've got to be your own hype person, if you will. And that all is very crucial to do because no one's going to, not no one, but you know what I'm saying? Like, you got to brag about yourself sometimes. And, that's just the nature of it. You got to do a little puffery every now and then to show and convey your expertise there, if you will, particularly with your investors. So
That's why I have Craig. He's my hype man.
exactly.
ADHD.
Yeah.
Yes.
We do an annual shareholder event as well. So it's like we do an online summit. There's like an in-person component. and we go over every single asset. So we spend several hours going over every single asset just from a high level. We don't get into, P&Ls and all that, but then we break after the event, then we publish it, break it up into like each asset section, publish it on a page. So somebody who wants to go in and do like a deep dive, they can see every performance of every asset. And then there's like a, in-person component where we're doing that, but we don't necessarily cross-sell it, but the wins are all kind of promoted in all of that. So we invite all the current shareholders to see the whole thing, open the whole book.
Will we have time for questions at the end?
Yeah, we can do that, yeah. And if you want to keep them coming, like this is an open forum discussion. So
Okay.
whatever is most valuable for you guys, we want to make sure we can get that out.
Does anybody do in-person events in your town? Let me tell you what we do, and then, and this is the question of how much to hype and how much just for networking and fun. I have an event barn in my back of my property, and we put on bourbon events, wine events. Last one was whiskey of the mob, and a guy comes in. It's great stuff.
It's funny, my invite must have been lost in the mail.
Me too, man. I didn't get that at all.
And it's for our guys, and it's an investor, but bring a friend. And
That's brilliant, by the way.
and then next one in June is the mezcal tequila of the Mexican Banditos.
Yeah.
So it's a theme and a story they come in, but we don't do a big pitch on Skyline Point Capital. And my question to you guys is, if you've done something like that, we didn't want to go, oh, you're gonna hear a big pitch on Skyline. We wanted it relational, just come in, have fun. We do a little blurb on that, but one of our investors goes, you guys got to do more pitching on what you guys do. And so I'm trying to, what's the balance if you guys do that? I don't want to go.
Tell them, great, I got a deal here. You would write me a check right now. We're good, right?
Yeah.
So I think what I would do in that situation, how long are these time frames of the event?
Every quarter.
Oh, well, so but at what time do they start and end?
We have them an hour.
Until the cops show up.
No, they have an hour, but they're there for 2 hours. 'Cause they won't
Perfect.
leave.
So if it starts, let's say it's a 6 to an 8 p.m. event.
It's
at-
5:30 to, I think it's 5:30 to 7.
Okay. I would probably 30 minutes after everyone's there, meet and greet, and they're loving you because they're a tequila deep, is when I'd probably say, and I would make my, hey, I'm going to present, I'm going to give my spiel here. Thank you so much for everyone who's come, yada, yada. And then say, hey, this is what we're doing right now. If you want to learn more about it, QR code them or do something, have a call to action of sorts.
Yeah, we have a little bit like that, but not enough. And so, okay.
But it's the
On
best thing
those
about it
types
is
of
you're not getting
events,
pitched to death.
yeah, those
Yeah.
types of events. I mean, I like the idea of the relational building. That's part of what we're talking about too, right? Because I don't think you can build relations enough, right?
Yeah.
You really can't. I mean, I think that's one thing you'll constantly will be doing, and you use other hype men to pitch your services, and that's how it works, right? They're going to invest with you because they like you, right?
And that's the approach we've taken. And so, okay.
Yeah.
Yeah.
Well, Steve, I got some thoughts on that too.
Yeah.
I mean, we started off, and that was our main, how do we get the capital in, bring a friend? Absolutely. But we would do it when we had a deal under contract and try and pitch it. And so we were coming in at the 11th hour. And so we're switching it up now where it's like relationship based, bring a friend, eat our food, drink our wine.
Right.
And then we're going to be having our updates more of like, here's what we're seeing in the market, call out some wins, here's some good deals, call to actions, hey, join the mailing list if you want to stay up to speed on this, and leave it at that. And then we're also workshopping more for like our Class C investors at $500,000 and up, spending $5,000 a head to go do an offsite. Also not a big pitch, but just like really get that time with them. Side conversations about what we do, but that's something we're still workshopping on.
Kind of what we're doing right now. Yeah.
Yeah. Look, I mean, the reality is you're always raising. You should always be raising.
Yeah.
As a matter of fact, you should be doing it just as strong when you do not have a deal.
It's actually probably more powerful, you could argue, because
For sure.
then you're actually you're not just pitching. You can maybe pull some information out of them. But this goes back to connect with people in person. Get to know what they're like, what makes them tick, what's their why, what's their family like, stuff like that. Like the more you can personalize it and the more stuff I can pull out of remembering XYZ thing, the better I'm gonna be at my job and the more they're gonna appreciate that.
One of the things we did just recently, and we didn't do it the first couple ones, is at the beginning, we had everybody stand, oh, we got to go around the room. But everybody went up and said what they were doing. And then afterwards, they said, hey, can you give me the list? Because I want to know him and him and him. And it was kind of like you're building this network of in us to them, but them internally. It was awesome. So you had a doctor over here, and you had an insurance guy over there. You had and I'm looking for stuff, and it was kind of cross-pollinating. So
that's the best thing ever, is when it takes on a life of its own. Like, it's kind of something just to brag about ourselves for a second once more, is from our event in New York City, some of the people we did lined up institutional equity. A sponsor lined up institutional equity for their deals, and like they were just both so grateful for it. So it's like kind of connecting people like that is so valuable.
My smartest investor, Harvard guy, but the one that has all the questions.
Mm-hmm.
This was the whiskey of the mob. He got up out of his chair and started walking. I'm going, oh no, what's he gonna do? So he went up and grabbed the microphone and told a story about the custodian of his high school. His grandfather ended up being the brother of Al Capone. This is in Nebraska. I mean, it was a great story, but it was like, it creates this environment, and it was great. It was awesome.
It's amazing. Love it.
One tactical thing for you, Steve, that we did we've done at several events, is because they're being brought by a friend, the friend is your client, right?
Right.
Mobilize they're your promoter. So
Right.
What we would do is kind of more subtly place kind of QR codes with basically a lead magnet. It'd be like our economic forecast.
Oh.
And there's a lead capture form on there that would say their name, their contact, who brought you. So then we could basically process out to make sure we didn't miss any details. And then that follow-up is, hey, Steve, I know Bobby over here brought you to the event. Just want to say thanks for coming by. I saw you downloaded the economic thing. What'd you think about it? Do you have any feedback for us? And just kind of create a conversation from that.
That's a great idea.
Yeah. All right, so we're almost running out of time. So there's a couple more things I want to get through, but I love the connecting there. So that's awesome. So next thing is phone calls. How many people make phone calls when they're going out with the deal? Okay, good. You can't be scared of the phone. You cannot be scared of the phone. I can't articulate this enough. Then naturally you want to meet people where they are, but you got to reach out to them, say hello, create the relationship there. I think everyone has gotten an ear beating on the phone from me before, I'd imagine. So just make sure that you pick up the phone, you're reaching out for updates, fundraising, launches, closings. Like when a deal closes or they funded, I mean, really nervous time for them, right? Especially if they just wired their money in with you, letting them know that, hey, their dollars are safe. Boom, more trust, easy touch point. And that could be a text also or an email, but just giving them some sort of certainty or assurance that their money is not, off in wherever it may be to a prince in some country, right? So that's super important there. And then closing naturally when the deal closes or any updates like that. My goal is always to beat the email, but with a phone call. So I'm always like, Dasha, please just wait so I can call them first, or at least leave them a voicemail or send them a text saying, hey, the deal is closed, because I want to give them that personal touch and share that win with them and have that moment with them, because that's selfishly a way for us to just build more rapport, where if I can train people, say, if you're getting a phone call from Craig, that could be a really good thing, right? So I want to make sure that that is out there. And then following up sequencing. I'm sure some people have seen me do this trick before. So I'll just let everyone know about it. You'll see an email, and then I'll email you again, and then I'll text you, and then I'll call you, and then I'll go back to email. So changing up the sequencing, if someone's not getting back to you, is, I think, really, really valuable. And if someone doesn't work with you as well, ask them why. Hey, out of curiosity for some feedback, why wasn't this deal a good fit for me? Is there anything you'd like to see differently? And just see what they say. Maybe they're just really not a real investor and you're wasting your time. Like for instance, Rob and I actually, we sifted through our entire equity list, which is pretty long. And we were like, hey, if you're not getting back to this email and you don't want to email us, you're not getting back, no problem. Why would we want to spend any time or any mental energy thinking if this person is interested in working with us or not? They're basically giving us the answer by not getting back.
Because we send one email and say, hey, let's check in. No response. Send another email, hey, let's check in. And then the third email, or probably the third email, we said, hey, no problem.
This isn't AI, or this is actually me reaching out to you. Yeah.
Person reaching out to you, no problem if you're not interested. Just literally respond back like K or yes or just anything if you want to stay on our list.
Yeah.
Like you don't have to talk to us and you don't have to jump on a call or anything, but if you don't want to be removed from our investor list, just respond with something. And then all of a sudden we got a bunch of people just literally saying yes.
Cool. Yeah.
Some people actually said, oh, sorry, I was busy. Let's jump on a call. And so it's no hard feelings. People are obviously busy. They don't need to, they don't have no obligation to talk to us. But yeah, at the same time, removing them off the list actually gave us a bit of a high because
Create space
to focus on the good people, right?
Like, why wouldn't I, instead of these people who I'm chasing around, why would I want to spend a second of time as opposed to me talking to Casey, who came all the way from Washington to connect here today? Like, why wouldn't I focus on David, who drove from Houston, or Keith coming from Florida or Maryland? Like, why wouldn't I just double down on these relationships as opposed to the other individuals, right? Like, fish where the fish are, as simple as that sounds. I know it sounds funny, but like, go where it's hot. And then kind of a couple other last thoughts here. And I have a whole list here. We didn't get to everything. So if you do want this, I can email it to whoever. I'll probably just end up following up with everyone, sending it via email. I'll make it like a nicer PDF, if you will, just for some of our tips. But from a content perspective, not everyone has a podcast, but try to be a guest on podcasts. If you are going to just have some kind of base level stuff, it's not too hard to get Zoom or have something get edited or create Riverside and do some sort of just very niche down content to exactly what you're doing, whether it be a 5 or 10 minute spiel, do something with a self-directed IRA individual, do something with TriVest as how that works. Obviously for us, maybe that's not applicable to you guys, but do some sort of content, or even with Dasha about how 1031 exchanges works. Whatever it may be, whatever that could lubricate your business, that you could send that to someone else is super helpful. Like for instance, the other day, Sam and I created a podcast for kind of newbie investors and newer fund managers as to what to look for. So that obviously was something that I've sent to like 20 people by hand now, and I will continuously send that to them. And then following this, for fund managers also, as a touching point, we're going to do a podcast basically talking about this in another forum where we're going to go through this and have maybe 45 minutes to an hour of content that I can share with them again. So just little touch points like that, creating content is super valuable, I believe.
Yeah, and I would say with a focus on building your authority in the industry, whatever it is. So right, this is authority building for you. So when you're doing these things, whether it's your own podcast or guest podcasting or things of that nature, you're building yourself as the person to go to for these things, and that enables you to send those kinds of things directly to investors, and they can see how smart and great you are when you're on these things.
Absolutely. Actually, I think we have more time. I don't know why I thought there was less.
Well, is that the revised?
Oh, is it only? Yeah. Okay.
Because I think Dasha.
Yeah, you should text me right now. Cool. Is any other questions or thoughts that we want to share with one another before we wrap this up? Cool. Awesome.
You did such a good job.
Couldn't have done it without you, Sam. Cool. Awesome. Thank
Thanks,
you all.
everybody.
Yeah.